Thank you all for making the time to join us on today's webinar. My name is Natalie Taylor and I'm a content marketing writer here at Feedvisor. I'm joined by our very own Brian Liebman, our VP of Sales and seasoned merchandising and e-commerce expert with a track record spanning from Amify, PBS, Purchasing Power, and Living Social. Before we get started, I want to remind everyone that we will be sending out a link to today's recording and there will be time for a Q&A at the end of the presentation. So if you have questions throughout, we encourage you to enter them into the space provided and we'll do our best to get to all of them. The COVID-19 crisis has many brands and sellers on Amazon experiencing severe operational challenges that are hindering their performance, from inventory shortages to delivery delays to fulfillment restrictions, and so on. According to data from our 2020 report on brands in Amazon, 42% of brands operating on the marketplace say they generate at least half of their e-commerce sales from Amazon alone. A decline in performance, even over a short period, can be detrimental to your bottom line. Now is the time to reassess your Amazon strategy and make changes over the short term to ensure your success in the long term. Today, Brian will be digging deeper into some more stats and challenges that we're seeing on the marketplace, including how COVID-19 is disrupting retail and consumer shopping habits, particularly on Amazon, the latest Amazon updates and policies around COVID-19 and their impact on your business, short-term strategies you can implement to remain viable in the current climate, as well as long-term strategies to ensure your business's success moving forward. On that note, Brian, I'll hand things over to you.
Great, thanks Natalie for that awesome introduction. It's my second webinar and my second Springsteen song. Definitely seeing a theme and I love it. Before we get started, I just want to say hello to everybody. Thank you for joining. I hope everyone's safe and healthy and practicing social distancing. I'm super excited to be here, talk strategy, Amazon strategy with you guys. I love this and I hope you guys do as well. Before we got started, I wanted to kind of talk about this statistic that we see on our screen right now. 44% of consumers say they aren't comfortable going outside for non-essential items. That's nearly 1 out of every 2 people says that they aren't comfortable going outside. That is really upending who we are as a community, as a society, and as, you know, in retail and e-commerce in general. This is the ultimate Black Swan event. For those of you that aren't familiar with a Black Swan event refers to an extremely rare and impossible to predict event. It's usually widespread, has widespread ramifications, and it's random in nature. And over the past 30 or 40 years, there's been about 4 or 5 Black Swan events, usually in the financial area. COVID-19 pandemic has the potential to be the largest impacting of them all. And there are some questions that we need to specifically ask, what are the impacts of people not going out? Or what are the impacts of 44% of people saying that they don't want to leave their house for anything other than essential products? And what are the impacts of stores being closed? What are the impacts of factories being shut down? How is the retail community going to be nimble and agile? And we've already seen e-commerce specifically be up, but there are ways that we could sort of take this, be very strategic, be very nimble, be very agile in our go forward practices. This next slide, I won't spend too much time on category data and sales trends because we've seen this a lot. But this, I kind of wanted to talk about it very briefly. This is Feedvisor index data over the past couple of weeks related to what we're seeing on the marketplaces itself, specifically Amazon and Walmart. And I think there's a lot of trends that we've seen across e-commerce in general with beauty and grocery being significantly up, and high-end apparel and shoes, automotive being significantly down. I think this is really indicative of people being, home and having to figure out, what is essential to them. This next slide I actually find really great. It breaks it down by subcategory. It kind of goes into the top 100 fastest growing and declining categories that we see out there. And some of these make a lot of sense. Exercise, anything that you could do at the house. We can't go to gyms and yoga studios anymore. So people are buying, weight training equipment, buying, yoga apparel, things like that. Other things that we're seeing are anything that has to do with working from home. Everybody's been, trying to figure out how to do this. Computer monitors, computer accessories significantly up. And on the flip side, you see things such as anything that has to do with outside, golfing and camping equipment down. Early on, we saw a downturn in electronics. Electronics has stabilized, and actually over the past week, we've seen a 3% index increase. I do think that specific subcategories are going to be stabilized over time. I don't think you're going to see a 650% increase in things like bread machines going forward as we kind of get past this hoarding mentality and the world is going to end mentality and things start to stabilize over time. So I thought this would be a great opportunity for us to take a quick pause, poll everybody with us today. I'm really interested to see how has COVID-19 either positively or negatively impacted your business. Let's take 5 or 10 more seconds for everybody to complete it. I see everything coming in. And while people are filling out this poll, this is a great opportunity just to remind everybody, if you have specific questions, either now or throughout the presentation, feel free to put them in. We should have plenty of time towards the end to address all of them. Awesome. So when we wrap up the poll, I see almost everything is in there right now. Across the board, it looks like there's been a lot of positive and negative feedback. Interestingly enough, 61% of you guys that are here today has said that it's positively impacted your business, while 35% say that it says that it's negatively, and 4% says that it hasn't at all. And this is fairly indicative of what we here at Feedvisor are seeing across the board. We actually reached out to our customer and partners and wanted to track some of the survey feedback for you guys here. On a whole, from a positive perspective, we're seeing advertising being significantly less competitive. On average, we're seeing your dollar in advertising go 35% further. Essentially what that means is you have the opportunity to invest, 35% more and get significant returns, or for the same investment, you're able to spend 35% less and invest in other areas. Other ones that we're seeing is, Amazon warehousing is starting to catch up. We'll talk about that in a little bit more detail, but just yesterday, I'm sure everybody heard that Amazon lifted their ban on non-essential products, meaning that 1P and 3P are able to send products in, whereas before they were being restricted. Another thing we're hearing from our customers is that technology enables them to quickly toggle up and toggle back, both advertising, pricing, and enables them to be very nimble. That's probably one of the reasons why we're seeing such significant growth, specifically in a positive perspective, both from you guys here and our customer base in general. I think this next one's really interesting. Across the board, we've seen our customers say that Amazon-related sales are skyrocketing, and others have said that it's slowed. A lot of this is category dependent and or supply chain dependent. Those of you that are probably having a really tough time are probably having inventory related issues. I know that there's a lot of overseas plants that have been shut down. I know it's been hard to get product into Amazon, both on the 1P and the 3P side, specifically if you're in categories that were originally deemed non-essential. I know Amazon opened it up about 2 or so weeks ago to expand their definition of non-essential, but I mean, it has been challenging for a lot of our customers to get their products in there. Lastly, a lot of FBMs have been forced to shut down, specifically if you have warehouses in the New York, California area where you can't have more than 10 or so people in any particular area. A lot of places have also been opting to shut down their 3Ps, their 3PLs for the safety of their employees. Overall, Feedvisor GMV has increased by 18% or so over the past 3 or so weeks, which really shows that those that are investing in technology are really putting themselves in a great opportunity to be successful. And we'll really dig into that in a little bit more detail. I thought we also wanted to pause here real quickly to talk about some of the latest breaking news. Last week, China announced that they're going to be opening up several of their cities that have major warehouses. And what this is essentially going to mean is a lot of us that source our product overseas are going to have access to product that we originally was being constrained. And this is huge, specifically as we, especially in the e-commerce area, are seeing sales increase by about 30% or so from where they were just 45 or 60 days ago. Next big piece of news I think is worth addressing is, 3 weeks ago, Amazon announced that they're going to hire 100,000 new employees in their warehouses and increase their hourly pay rate by $2. Just yesterday, they announced that they're going to add an additional 75,000 over and above the 100,000 employees that have already been hired, bringing in 175,000 new jobs that will allow people to, get their products in faster, but more importantly, get products from Amazon warehouses to consumers in a more expeditious fashion. I know a lot of you guys go online and see ship times anywhere from like 3 to 6 weeks, which is vastly different than what we're all accustomed to in the Amazon Prime 2-day or overnight shipping area. I don't know about you, and I'm an avid Amazon consumer. Even when I buy something that says it's not going to arrive for 2, 3, 4, 5 weeks, it typically arrives in 5 to 7 days. Again, not 2-day, but significantly better than what's being advertised on Amazon. Other things worth noting is Amazon's waived long-term storage fees in April, and they've also halted account health suspensions. I think this is going to enable folks to become a little bit more nimble as we get through the inventory issues, and allows Amazon to prioritize where they're going to put their employees to help really fulfill demand for consumers. And again, I think another one worth mentioning is Prime Day has been pushed from July to Q3. From everything that I've been hearing from my sources, it's likely in September, but a date has not been announced yet. Likely will be announced in the next couple of weeks. And hopefully by then, a lot of us will have contingency plans and strategies, many of which we're going to be talking about today, in place to ensure that we'll be able to take advantage of Prime Day. Again, before we kind of go into strategies, it's really important to ask questions about your business. Everyone's business is a little bit different. There's no one size fits all approach. And I think it's important to kind of check back in. When we talk to our brands and our sellers, we really talk about a 3-phased approach. Really, the first 2 or 3 weeks is really the shock and react phase. Oh my God, the sky is falling. What am I going to do? I don't have access to this. I can't get access to that. Once reality sets in, normalcy sets in, and we're able to really put in and reassess, that's the second phase. It's the how could I implement against my strategies. And then the third phase is really the how I execute against it, and what are those long-term strategies that are going to really help me thrive. So that's really the 3 phases that we're talking to our brand partners and our sellers about how they want to kind of go about their business. But before we talk about the strategies, like I was mentioning, it's 5 major questions that I think is really important for everyone to be asking ourselves. The first one's related to inventory. How severe are those anticipated stockouts to be? Are you able to have different areas source your product? Are you reliant on those overseas factories that have been closed down? And now that those factories are open, will you have a steady access to your inventory going forward? Can you ramp up supply? Can you ramp up, for anticipated e-commerce demands? Second question is related to your business specifically. How reliant are you on brick and mortar? Are you an e-commerce only brand or supplier? Do you focus on marketplaces and Amazon specifically? This is really important. It's going to enable folks to see how nimble they could be. If they're reliant specifically on brick and mortar, we're going to have to figure out how we could quickly open up a website and or rely upon marketplaces. If your products are only at brick and mortar, how can we pull them back? This is a major question that a lot of brands are asking themselves, especially as they have multi-channel approaches right now. And one of those channels, brick and mortar, is specifically shut down indefinitely. Third questions we ask our brand partners is, what are your best sellers? And are those the products that are being impacted? If they are not being impacted, well, your long tail products are, and I think that it's an easier, conversation to have than if your best sellers are being impacted. Can you diversify your product portfolio? How can we sort of utilize your advertising dollars for, throughout the breadth and depth of your overall portfolio? We'll talk about that in a little bit, advertising specifically a little bit later. The fourth question that we're asking our brand partners to really address is your category and the market you're in. How is it being impacted by COVID-19? Are you in the grocery space where you're seeing 70+% increase and you're having a hard time keeping up with demand even though you have access to inventory? Or are you in other categories like luxury apparel where you're seeing 25% decreases? This is really important in how you want to go about your short-term approach before things start to normalize over the long run. The last piece is important. It's how nimble, how agile can we be both in our advertising and our marketing efforts. This is extremely important because you may only have X amount of dollars to utilize, and you want to figure out where that highest ROI is on your behalf. So this is the fun sheet that I'm sure everybody's been waiting for. These are short-term strategies that we're working on with our customer partners to implement. And like I said before, this is clearly not a one-size-fits-all. Everybody's business is a little bit different, but there are some really great strategies in here that almost everybody should be able to execute against. The first strategy is, again, I've referenced this before, but it's so important. What category are you in? How many products are you offering? Can you broaden your product portfolio? A lot of brands and customers that we work with only have a limited assortment of their catalog on Amazon or on marketplaces or on e-commerce. This is a great opportunity for you to expand your assortment. If you're running out of stock on your best sellers, this is a really great opportunity to put your other variations out there, your other products, put your marketing dollars behind those to really ensure that you're not going to miss too much. Second strategy that we really hone in on is your FBM and FBA strategy. So about 7 or 8 weeks ago, there was another webinar that we put together, which is really asking brands how to maximize their Amazon and their marketplace strategy. And we talked about having a hybrid approach. And I remember on that webinar, 81% of the folks that joined did have a hybrid approach. So they did have both an FBA and an FBM. For those of you that are not familiar, FBA is fulfilled by Amazon, FBM is fulfilled by merchant. And again, we're also, saying you want to have, you could also have a 1P and a 3P hybrid account approach. And we're saying take it a little bit further right now and have an FBA and an FBM approach. So if you're not able to get your product into Amazon, if they're only allowing you to send in X amount of inventory at a given time and velocity increases, you can quickly shift and fulfill from your own warehouses. And if you don't have access to your own logistics, consider working with a 3PL. If you're in an area where there is, social distancing, you can't have more than 10 people in any given environment, try to identify a 3PL that's in a different state that could help you quickly get up and execute against these. Third strategy that we're talking to our brand partners about is how can you keep your product in stock? And, this is, a really interesting conversation because we want to be very conscious that we're not increasing our price 2, 3, 4x and we're price gouging. We absolutely, I'm adamant that you don't want to do that. Amazon has already shut down over 4,000 seller accounts and over 150,000 listings for price gouging on essential items. What I'm referring to is basic supply and demand. Slowly increase your prices until people are buying a little bit less. If you're having inventory related issues, you want to lower your rate of velocity until you're able to catch up with inventory. And we'll talk about how you could also do this on the advertising side as well on that next slide once we get to it. Fourth strategy is move your product from your physical stores to e-commerce and or marketplaces if you can. I know a lot of stores are closed down. You might not have access to your inventory, but if you could divert, that would be great. If you have product in staging areas, if there's product in transit, this is a great opportunity for you to really maximize the e-commerce opportunity, specifically Amazon, where people are going. Just yesterday, I read that Amazon stock was at an all-time high, and that's because Amazon really is the first place, the destination of choice for consumers to go to find products and your product specifically. If you're a brand, I highly encourage you to be enrolled in brand registry. If you're not, it's just something that you want to do immediately. Brand registry gives you access to beta programs and other things that normal sellers do not have access to. You can communicate with your consumers and your customer through your brand store. You could update them on your product, what you're doing in the community. You could talk to consumers through beta programs that are now offered, such as Post and Amazon Live. Amazon Live is a chat function, and Post is a new beta advertising function that allows you to communicate with potential customers. And these are powerful, specifically since we know the volume and traffic of folks that's on Amazon right now. If Amazon's becoming a bottleneck for you, highly encourage you to diversify your portfolio, utilize Walmart, utilize your own e-commerce site. If and again, figure out ways on how we can ensure that you're maximizing coverage and getting through to your consumer. And lastly, stimulus checks are going to be hitting soon. I just read an article that they've already started hitting accounts. This is really an opportunity to ensure that you're maximizing this opportunity. So when people are going to be spending that stimulus money, they're spending it on your product, they're able to find your product and they're able to communicate with you. And then lastly, in your advertising, be both promotional and altruistic. You want to be able to communicate to your consumer what you're doing, how you're trying to survive and thrive through the COVID-19 pandemic, what you're doing for the community, what you're doing for your workforce and employees. Again, I think being promotional is extremely important, but right now people want to align themselves with brands that are doing that are doing good things. And since advertising is so crucial, I wanted to break out strategies specifically related to advertising separate. These are 6 strategies that we talk to our brand partners about executing against. And for the most part, we see a lot of our brands really focusing on 4, 5, and 6, but not everybody has the opportunity to do that. So I wanted to make sure I was going through all the strategies and giving us the full gamut. Number 1 strategy is, again, if there's impacts to your inventory and or product assortments, consider reducing your advertising volume or shifting your volume to products that have healthy stock levels. Another one is, if you're having cash flow problems or inventory across the board issues, consider reducing your volume across the board. Maybe there'll be organic increases that will help you. Or if you're in one of those categories that people are just not resonating with right now, if you're in the automotive category or similar ones where people aren't driving and going out, this is an opportunity for you to sort of save your advertising dollars and utilize them later when things tend to rebound a little bit. A third one is increase your prices. We talked about this a little bit before. Here again, I want to caution everybody, if you're increasing your prices, do it responsibly. We want to make sure that you're not gouging it to maximize profitability, but you're doing it to ensure that you're going to have ample inventory for more consumers to engage with and purchase. Now, like I mentioned before, 4, 5, and 6 is what we're seeing the most of. A lot of folks are staying the course. You're seeing a 35% ROI on your advertising dollar versus where we were 30 to 45 days ago. A lot of brands we talk to are actually maximizing this opportunity. They're increasing their advertising, and they're doing this for a few reasons. So we have one brand partner in the electronics space, and even though electronics has been down for the first 2 weeks of the pandemic, last week it kind of indexed to be 3% above. Even though it's only 3% above, they are all in on Amazon advertising because brick and mortars are shut down and because it's the only way for them to be communicating and get their product to their customers. So again, this is really a great opportunity to shift your marketing from one channel to another and identify great opportunities for you. This is also an excellent opportunity to maximize on some of your competitors' challenges. If your brands are not maximizing Amazon and nor marketplaces or e-commerce in general, if they're not advertising, this is a great opportunity to conquest their products, their listings. It's a great opportunity to convert a new customer. It's a great opportunity to really inorganically increase your sales rankings. So once things do stabilize, your products will be significantly higher on the search page result, and then you won't have to invest as much money in advertising then. And then lastly, really important, focus not only on Amazon and marketplaces, but off Amazon as well, social and your own site. I've been reading a lot that, especially on social sites, people have been, again, altruistically trying to show what they're doing and also being promotional there as well. And on that, this is a great stat. 43% of consumers say it's reassuring to hear from brands that they know and trust. That is really why it's important to ensure that you are being both promotional and altruistic. You want to show people what they're doing. You want to be hitting them from multiple different perspectives, and you want to be top of mind, and you want them to really reach out and think about your brand first and foremost. So once we get past phase 1 and then phase 2, and now we're on phase 3, which is really the long-term strategies. And I think a lot of the brands that we've been talking to are really positioning themselves for this third phase. There's 3 main strategies, and these are not small ones, but these are 3 main strategies that we do want to spend quite a lot of time on. So we talked a little bit before about 1P and 3P strategies. Can't understate that enough. You want to make sure that you have both a hybrid approach. You want to have both an FBA and an FBM approach. This puts you in a good position for the future. And also, if there are other Black Swan events in the future, 3, 5, 10, 20 years from now, maybe 20 years is pushing it a little bit, you will be in a great position to be very nimble and kind of execute against it right there. Another one is really investing in technology. I read an article last week from Forbes where they said that in 2009 in the recession, the brands and manufacturers that really put themselves in a position to thrive for the next 3 to 5 years were the ones that invested in technology then. They took their dollars and they invested, and they did that for a couple of reasons. One, they saw the long-term opportunity, and two, there was really great opportunities to purchase technologies in a little bit more of an efficient, price. Folks that were offering long-term contracts were being very, careful to support their communities and offer them either in different capacities or provide discounts. So this is a huge opportunity for brands and sellers really to invest in technology, really to take advantage of some of the challenges that their competitors are having, and really put themselves in a really good position to be successful going forward. The last thing is, again, double down on e-commerce, double down on Amazon. Amazon is really becoming the first stop and the destination for consumers to find your products. Like I mentioned before, 7 or so weeks ago, we did a webinar. We talked about brands that were not on Amazon for various reasons. I can guarantee you those brands right now are rethinking their strategy, and they're thinking to themselves, I can't rely upon my specialty brick and mortar channels. I can't rely upon them solely. I need to ensure I not only have a strong e-commerce, but a strong Amazon presence in itself. So this next slide is really interesting. I've read a lot of articles. A few are calling it a retail apocalypse. And I thought that it's definitely worth mentioning. So if you look at the last 5 or 7 years, on average, we're seeing anywhere from 4,000 to 9,000 store closings per year. Right now, a study by Goldman Sachs states that there's over 500,000 stores that are temporarily closed due to the COVID-19 pandemic. 500,000. In that same survey of 1,500 brick and mortars that are temporarily closed, they state that if this lasts more than 3 months, more than 50% of them likely will not open. That's 250,000 stores potentially will not reopen if this lasts more than 3 months. Even if we want to take a super conservative approach, and let's just assume that 80% of these stores open, that's 100,000 stores will not reopen. 10 times as many as closed in 2019, where we had 9,300 store closures. So again, brands and sellers are going to have to find a different way of communicating with their customers, engaging with them, and putting their brands in front of them. The other thing worth mentioning is that we're macroeconomically shifting and changing how people are buying product. So I don't know about you, but I take my personal life. My parents are a great example. They are not huge e-commerce or online shoppers, and now they're being forced to be. They're downloading apps. They're getting groceries. They're getting other products delivered specifically to them. The longer this goes on, the more muscle memory that's going to build, and the more commonplace this is going to become. So yeah, absolutely. Once this is over, people will go back to stores. I'm not saying that they're not. What I'm saying is that there's going to be a rapid and macroeconomic change from the way people were shopping before to the way they're shopping now. And this next chart I thought is indicative. This is stats from eMarketer, about 14% e-commerce total penetration. I wouldn't be surprised if this has more of a hockey stick effect once it's redone. In 2021, I wouldn't be surprised if overall e-commerce penetration goes from 14% to 20, 25, maybe even higher. People are going to become more accustomed to shopping online. Technology is going to enable people to do it. Brands and sellers are going to put themselves in a position to be significantly more successful. And it likely is going to have a long-term lasting impact on e-commerce in general. And then this chart on the right just shows how impactful of e-commerce Amazon is. Amazon really is leading the way. This is really where you want to be driving your marketplace strategies, where you want to be having your e-commerce strategies. You want to make sure that it's aligned and it makes sense going forward for you. And this next stat really cements that point. Shopify announced that March, month over month, site creations has increased by 25%. So what does that mean? It means that brands are they're getting past that initial phase one. They're really in phase two. They're trying to execute. They're trying to put themselves in positions to be successful. Brands that may have not had a strong e-commerce presence are really trying to take matters into their own hands, and they're going to be prepared. What does that mean for you if you're not? It means that you're going to fall behind your competitors, and you may not survive the short term and probably not the long term. This next stat is really marketplace specific. 36% of retailers say that they're making adjustments to their marketplace strategy as a result of COVID-19. 36% are taking Amazon that much more seriously. And this is just in that phase 2, 30 or so day window. I can guarantee you this statistic significantly increases in the next 30 or so days. So again, brands, large sellers, they're taking e-commerce seriously. They're being nimble. All the things that we talked about moments ago, really putting themselves in a good position to be successful. Once brick and mortar opens up, they'll have a very solid approach. It'll be more of a hybrid approach. And if there is significantly more penetration, like I'm foreseeing there be, I think that brands are going to be those brands that are able to be nimble are going to put themselves in a much better position going forward. So again, earlier I referenced the webinar we did about 7 or 8 weeks ago. We really talked about marketplaces and the paradigm shift in retail in general and how e-commerce has become significantly more sophisticated, significantly more complex. And in marketplaces, specifically Amazon is leading the way. Amazon is the first stop for the customer journey. Amazon is where consumers are looking for your products and for your brands. They're no longer going to Google. They may be going to the stores, but they may be converting online because of the breadth and the depth of products. Amazon is really where brands need to ensure that they have a multi-channel approach. It's seamless, it's uniform, and it provides that same overall brand and customer experience to their consumer that they have in their other channels. So again, really believe that brands and sellers to survive and really thrive, they need to rethink their approach to Amazon and e-commerce. When surveyed, brands' top motivations to sell on Amazon is because that's where their consumers are. 72% say that that's where their consumers are. And 71% say they want their audience that has access to Prime because they are always on Amazon, they're always shopping. 71%, that's 160 million households have access to Amazon Prime. That's nearly 65% of all households. That number is incredible, and I likely believe it's only going to increase. When surveyed, brands said the best part of selling on Amazon is acquiring new customers, and 93 said is gaining market share. I'd likely bet if we resurveyed the same brands now, it's gonna be closer to 97 or 98%, because this is where your opportunity to gain market share really is. So again, I wanted to focus on Feedvisor. Our goal, our commitment is really on the retail community and supporting sellers and brands in marketplaces and Amazon specifically. This is our entire goal. This is our vision. We have an incredible marketing team that puts together resources that I think is really beneficial to everybody. If you haven't gone to our resource center, you absolutely have to. We put out blogs on a daily basis. There's white papers, there's webinars. Just today, we posted a blog that I think is super impactful. I referenced some of the data in this webinar today, but it goes into buying patterns and buying trends at the macro and micro level on the category and subcategory, specifically more detail. It's really important that everybody checks it out. This really should be your one-stop resource for everything related to COVID-19, but more importantly, marketplaces and Amazon specifically. So with that, I kind of wanted to sum up. I wanted to say thank you for joining us today. I hope everybody stays safe, is healthy, I hope there was a couple nuggets or things that you were able to take from this and that you're able to be nimble and agile. If there are any questions, we have some time for questions. I would love to field them. And again, if you have questions afterwards, feel free to reach out. And with that, Natalie, I'll turn this back over to you.
Thank you, Brian. We would like to dig into some questions as part of the Q&A, and we also have a brief poll that you should see on your screens now. As always, if you'd like to learn more about any of the ongoing initiatives we have here at Feedvisor, please connect with us. So now we'll get into some questions. Let's see what we have. First question, Brian. If I'm running low on inventory levels, should I stop sponsored ads or raise the price?
Yeah, really great question. Both approaches typically work. It really depends on your overall inventory levels and will you have access to additional products in the past. First thing to note is if you run out of inventory altogether, you will not be spending money on advertising, specifically for sponsored products. You only get charged for sponsored products when you have the buy box and people are clicking on that particular sponsored ad. If you're running low on inventory, I absolutely think you should either toggle down your advertising or increase your price. There's probably a combination that you could do with both. Again, it just depends. You know, sometimes people have prices where they're at MAP, or you know, they want to keep them uniform across channel. So there are different strategies that you could do with both, but you want to make sure that you're maximizing your overall ROI, and that you want to keep your products in stock so that consumers will only have access to it. When you go out of stock, you risk losing your ranking, and that's one thing that we encourage you not to do.
Next question. What are your thoughts on going on vacation status to avoid raising prices to save inventory and hurting my search rank position?
Really great question. We've had a few of our sellers and brands ask us that over the last couple of weeks. My recommendation is you only want to go on vacation mode when you have to cease operations entirely. So if you have to shut down because you're one of those states where you can't have people, you know, sending product in, or your warehouses are in one of those states where you can't have more than 10 people, or you just can't get access to inventory, which hopefully now is going to subside a little bit now that overseas warehouses are starting to kick back into operation. Other than that, I wouldn't go on vacation unless it's a last ditch effort. I would try to figure out other strategies, like we mentioned before, either raising your prices slightly or lowering your advertising spend. The other thing is to focus on your other products within your portfolio. There are quite a few things that you could do, but vacation mode is really when you just need to cease operations for all your products entirely across your portfolio.
This next question, Brian, is more observational. Have you seen any change in trends for healthcare products on Amazon?
Yeah, healthcare is booming for the most part, especially if you have one of those products that were deemed essential, you know, Purell, Lysol wipes, anything like that, face masks. You know, not only has it been incredibly difficult to get, but I believe it was last week, Amazon's actually restricting specific products to healthcare professionals. On a whole, to answer your question, healthcare products, beauty products are really up significantly. Our own index, results show that it's about 30% increase overall. I've read other areas where it's up significantly more than that, but our customers, the brands that we represent, are up about 30% in healthcare and beauty specifically.
This next question is from a seller in India. Is the information related to long-term storage fleet fees applicable for the Indian market as well? Or is that just in the US?
That is a great question, and I honestly do not know. But with that, I will find out, and I will absolutely, Natalie, if we have this person's information, I will reach out with the information itself. I would likely believe that it's probably agnostic across marketplaces, but I don't want to provide information that may not be correct.
Absolutely, could definitely do that. And we have time for one more question. The delivery times for some products in my ad campaigns are really long. Do I need to make any changes to my campaigns?
At this point, I probably wouldn't. We mentioned before that even though on the site or on Amazon.com it says products won't deliver for 2 to 4 or 6 weeks, typically they are delivering in 5 to 7 days. I think Amazon just being very conscious, specifically if it was one of those originally deemed non-essential products, but products are delivering quicker. Now that Amazon has lifted the restriction on non-essential products, allowing people to send in products across the board, I do believe there still will be inventory restrictions on how much you can send in, but you're able to send in products across the board, regardless of category or subcategory. I don't believe so. I don't believe you need to do so unless you are significantly going to run out of stock and you can't get more product in. I think that things are going to kind of offset over the next couple of weeks. Amazon, like we mentioned before, has hired or is in the process of hiring an additional 75,000 employees over and above the 100 that they hired before. This is to really ensure that consumers will be able to get access to the products that they buy in a much faster time. I still don't believe it's going to be the 2 or 3 days that we've all been accustomed to and we know and love Amazon for, but I do think it will be closer to that, 3 to 5 to 7 day mark, and not the 2 week to 6 week window that is sometimes being advertised online.
Awesome. Well, thank you so much, Brian. We really appreciate your time today. And thank you to everyone listening in. As a reminder, we will be sending out a link to the recording shortly. And for anyone whose questions we did not have a chance to get to today, we'll be sure to follow up with you. With that, please feel free to reach out if you're interested in learning more. Thanks again, stay safe, and enjoy the rest of your day.